Hello all, I'd like to welcome you all to the Fintech Finance Virtual Arena where we are hosting you today. We're going to be discussing fintech and the banking ecosystem in the United States with none other than Eric Garretson, the CFO from NBKC Bank. Thanks for coming on, Eric. And could you actually take this chance to introduce yourself a bit and tell us a bit more about NBKC?
Sure, Doug. So I'm Eric Garretson. I'm the CFO for NBKC Bank. We are located in the States, specifically in Kansas City. We're about $1 billion in asset size. And we've actually been pretty engaged in the fintech space really substantially over the last few years, but really in our entire 20-year history. Kind of what that's looked like is really two ways. One, we are a pilot bank for a startup, a brand new startup that has an idea, or an existing company that has an idea or a product, and we work with them hand in hand to basically help them get their product ready for distribution. That's kind of what we've always done in fintech. And then really most recently, we've also added bank partnerships with fintech companies. So a lot of these companies that are out there, neobanks or savings apps that are in need of a bank to provide banking as a service for their clients, we basically are the bank of record that sits behind those companies.
That's actually really interesting. I mean, having that kind of storied history when it comes to fintech. I guess in your case, does the F in your title actually stand a bit more for fintech than financial officer?
Yeah, great question. So I am the CFO, and kind of I would describe that as more of a traditional CFO role, like what you would imagine in a bank or other organization. But the exciting part is about 3 years ago, I took on the additional role of being fintech strategy leader. So really what that means is that I try to help guide the organization with fintech as a strategy. So whether that be partnerships, whether that be looking for products to bring in-house. When you kind of go through our business lines, deposits is what we're the most active in right now. So I sit in on a lot of prospect client calls, on people that are in need, companies that are in need of banking services. And then on the lending side, whereas right now we're primarily only lending to small, medium business in Kansas City, trying to help identify either different types of lending products or different kinds of lending solutions that can help us expand nationwide in that aspect. And then always looking for what I like to describe as B2B products, which are products that we can bring in-house to either help with our efficiency or customer-facing type solutions. So that's probably the best part of my CFO role, and the F, like you stands for somewhat fintech now.
Brilliant. And taking a step back, more from your role to the organization as a whole, NBKC is a community bank, and for maybe our European viewers, could you give us a bit of background to that and what that means in the financial ecosystem in the United States?
The United States is a bit interesting in our banking and how we have our banking ecosystem. So there are something like 4,000 banks in the United States. If you compare that to the UK and the rest of Europe, obviously it completely is enormous compared to that. So I don't know really why it's like this. I think it's really kind of been our traditional banking system. And so when you think of our banking system, it's really categorized by a bunch of really large banks, some regional banks, and then the smaller community banks. And the community banks, they have been successful through the years because we have that hands-on customer approach. Whereas the big banks, they really just have to grow in order to kind of maintain their base. As a community bank, we're able to offer really a lot of the same services and same great experience that the big banks do, but we're able to do it with that hands-on experience. And so that's really kind of, I think, what is unique about community banking here in the United States.
That's really interesting. So effectively, because you have that more targeted audience, would you say that community banks can typically be more agile than the high street or main street style banks, such as JP Morgan or Citi?
I'm obviously very biased working for community banks, so take it with a grain of salt. But yeah, I firmly believe, just looking at my bank and looking at some of my peer bankers, I do think the community banks are able to act more quickly and be more agile. I think probably the best way to describe it is some of the stories that I've heard through the years. As we were launching our fintech strategy, went out and surveyed and met with a bunch of different founders and management teams. And what we heard over and over again was the length of time that it takes for a fintech to partner with a large bank. Now, granted, the big banks have been doing this for a very long time. much longer than the community banks have and much longer than NBKC. But when you think about it, it takes 12 to 18 months in order to strike up a partnership with a large bank. So one, it takes time to find a person at the organization to talk to. And secondly, it takes time to go up the chain in that organization to find out who the decision maker is that can actually say yes or no, let's do something. And then there's an extensive amount of due diligence process, contract negotiation before all that onboarding starts. So especially if you're a brand new startup, you may not have 12 to 18 months of runway. And so that is really what we've been able to do as a community bank is me and my other members of my team, we are the decision makers in the organization. So we're able to very quickly vet an idea and determine whether it's something that we can actually work with or not. And so we're very quick to not waste founders or management team's time and say, hey, we're probably not the right bank for you. So that is how I would describe the agility compared to a larger institution.
That's absolutely brilliant. And what does that mean, transferring that agility? What does that provide your customers, for instance?
Well, the agility, I think, really saves people time. And, people are not opposed to a no answer. What they do not like is being strung along. And so I think, to me, that agility is being able to, one, see what they want and make sure you have a clear understanding of what their needs are. And then just be very matter of fact with them about whether it's something you can do or not. And there's a number of cases where, it's not a quick no or quick yes. And so there's additional diving in of due diligence that needs to be done. But I think it really allows a founder who is extremely busy trying to raise capital, trying to get their product to the next level, trying to get it to market, whatever that looks like. And if they can quickly go through a group of, potential partners and say, here's the one or two or three versus the 10 that I now have to spend a bunch of time trying to understand if they're going to, say no 6 months down the road or 3 months down the road or whatever that looks like.
You're renowned for your lending suite. And has that come about from this agility within digital technology? Can you tell us a bit more about your services in lending?
What we're doing now in fintech really is a derivative of what we've been doing in the mortgage business for 20 plus years. So we originally started out as an online mortgage lender back in 1997, originating in all 50 states. So very early in the infancy of the internet, early in the infancy of online lending. And so in order to lend online, not only do you have to be competitive and have an efficient back office, but you also have to have this great customer experience. So I will tell you that although we were nationwide and we're all on the internet, back then there was still a lot of faxing back and forth of customer leads and a lot of FedEx packages and all that. So it maybe wasn't as pretty and sexy as what it is today. It was as digital as you could get back then. But what we've really learned from that business and had to be competitive in that business, because we are a fairly large lender, especially for our size bank in all 50 states, is taking what we've learned in that and bringing that over to the other areas of our business, like commercial lending, like I talked about, the small business, small SMB lending that we are wanting to do or are doing now, and then also on the deposit side.
And I guess kind of following on from that digital DNA that we're talking about, I've heard that NBKC is pretty much a completely digital bank. So it was bound to come up, but obviously with lockdown, what was that like for NBKC? How easy was it for your colleagues and your customers to really grapple with the change?
Yeah. So we have been a digital bank really for at least the last couple of years from a deposit standpoint. We can bank customers, consumers and small businesses in all 50 states. So they are used to us call it working from home, right? They're used to not interacting with us in a lobby. We do have currently four existing branches in Kansas City. It was a really minor change there. My colleagues continued coming to the office, opened up the branches. They were drive up only, so they did not interact with anybody individually. But we've really done a good job over the last couple of years of having a very extensive touch point with our customer base, and we continue to have commendations from our clients and customers to say, hey, I can't believe not only were you able to solve my problems, but you were able to answer my call directly. So we engage with our clients. We don't have the whole 1-800 number, the toll-free call-in number, call entry number. We pick up the phone, so we interact through live chat, through email, and through voice calls. And we're able to do that in a way that it's non-existent whether we're working from home or whether we are in our branches.
If I want to talk about the American ecosystem when it comes to finance and banks for a bit, obviously every state is very different. And that's what makes Kansas City slightly unusual for a European. I know that there's a Kansas City, Missouri, and there's also a Kansas City, Kansas. Where does that put you in the ecosystem? Are the regulations different across the states? And what does that really mean for NBKC?
Yeah, that's a great question. So, oddly enough, we're a Kansas chartered bank. Well, let me back up real quick. 'Cause I want to address your KCMO. I'm very impressed that there's a KCMO and a KC Kansas. That means you've either done your research or you've kind of been in this area, because a lot of people do not know that. They are two different cities, two different states. We are actually a Kansas chartered bank, but our corporate offices are in Kansas City, Missouri. There are some different regulations that apply from state to state. So we're regulated by the Kansas State Banking Commission, which would be different than the Missouri State Banking Commission. So there are different regulations that those state governments would have. However, generally speaking, we all follow sort of FDIC type. If we're a state chartered bank, we follow FDIC chartered or FDIC regulations, and that would be all 50 states. So from that standpoint, there are some little nuances between the states, but we also have, as you may or may not know, a dual banking system here. So we have nationally chartered banks and state chartered banks. It doesn't really dictate where you're able to do business. As a state bank, which is what we are, we can still do business in all 50 states. It just really depends on who your regulator is and what regulations you follow. So there are some nuances with that as well in the whole banking ecosystem.
Oh, very interesting, because a lot of the time when I speak to fintechs, there seems to be this kind of perceived fear of entering the US market. 50 different regulators is always the phrase I hear. So it's interesting to see how with the banks, there's at least this kind of a way you can play to enable yourself to work across numerous ones. I mean, we've recently seen, kind of going off topic here, but a lot of the challenger banks in Europe, for instance, N26 and Monzo, moving over to try and make something for themselves in the States. And I've got to ask, do you think that there's room for them in the market? Or do you think that the community banking system that you guys have got now is ultimately successful enough that they might not succeed over there?
I think there is room for the challenger banks to come to the States. However, with a caveat, I think that when you think about the ease of the banking regulations in Europe and in the UK, the challenger banks do not necessarily have to partner with a bank in order to move money, to provision accounts, to hold customer funds.
Yeah.
In the States, that is much more difficult. Now, there's obviously been this more friendly regulatory speak on fintech charters, and we want to be open our banking system. I think the regulators are saying all the right things, and I think that is somewhat appealing maybe to those challenger banks that are trying to come over here. However, I do think that once they go through that process, the lengthy time that it takes to get a charter, and then let's say they are lucky enough to get a charter, which there's not been very many so far that have actually been able to be successful in that. I think once they start getting regulated and they start going through safety and soundness exams, I think they will realize how much of a challenge it is. For whatever reason, banks, and I don't know if it's because it's in our DNA, it's what we've been, we started with those type of regulations, and sometimes a startup is a little lax maybe in how they look at compliance and those type of things. I think that the regulatory burden on a fintech company that is trying to get a charter or trying to do it themselves here in the States, I think is going to be extremely difficult. And I think they will end up either, deciding not to move to the States and change what they're doing, or say, hey, you know what, we need to pivot and we need to work with a bank partner. And I think that's why, when you look at the ease in regulations over in the Europe versus here, we're at a competitive advantage really because of the barriers to entry. And so I love where we are as a bank positioned to be on the, on the forefront of the partnerships, knowing that it's not going to be easy for a fintech company to come over here and just spring up, their operation here without a bunch of regulatory challenges.
Yeah, thank you so much for the insight. And it's something that we always hear, and you see those big name kind of announcements, N26 in America. So yeah, it's interesting to see where that might go. Now, we've talked a bit about how the lockdown and Corona has ultimately enable digital remote working. What other parts of banking, and maybe even for community banks and NBKC, do you think is going to change, maybe be payments or customer experience as a result of this pandemic?
I guess I'll describe it in two different ways. I would describe it as from NBKC standpoint, and then I think from the community bank standpoint, just across the market. So from an NBKC perspective, because we'd already moved to the kind of all digital and really focusing on what that customer experience looks like, knowing that we're not going to have the face to face, but we can sort of simulate that with our extremely heavy touch points that we have. I think from that standpoint, there shouldn't be a lot of impact. I know that we're probably going to kind of tweak some things and really sort of improve that experience. Ironically, even prior to the whole COVID thing, we actually had on our strategic plan for this year to work on customer experience. So I don't know if that comes from just our CMO's background and the marketing team that she's built around her, or whether it's been through our interaction with fintech companies, or both. We know that fintech companies generally provide a better customer experience than a bank and a traditional bank. And so that is what we've always tried to be, is be more of a fintech company ourselves that provides banking services. So that's going to continue more for us, as we originally were already looking at customer experience. On the broad market, I know that when I talked to my peers, I think some of them had a hard time going to working from home and not having the interaction in their branches, because many of the community banks really are still branch focused, even though branches are becoming less and less of an important piece of infrastructure to have for interaction with your customers. I think that is still what it is. The community banking space still relies pretty heavily on the branches. And again, kind of like there's not a lot of banks that are doing fintech partnerships. Not every bank has a digital footprint. You'd be surprised, but there are still banks that do not have online banking or just rolled out online banking. So, I mean, it is absolutely amazing to me to think that a customer hasn't demanded that. Now, my guess is those customers are either in small rural communities and they don't think they need it, or they're already banking elsewhere at either a larger bank or a fintech company that's providing that online experience.
Eric, also, could I ask, as someone that's not familiar with the system, for instance, within Kansas City and Kansas and Missouri, how many regional or community banks would there be interacting in that area?
You're going to pin me down on a number.
Sorry, if you want to research it, you more than can. It was just an off-the-fly one.
No, to be honest, I don't know how many actual banks there are here in the Kansas City market. I know that Kansas City is what I would describe it as, Kansas City is a very overbanked market. Literally, if you drive down, through the suburbs, there's literally a bank on every street corner. So we have a lot of community banks. We have what I call a handful of the larger banks. So, and they're moving into this area. So, I mean, Wells Fargo's here now. JP Morgan Chase is coming into town. So it's definitely getting more competitive, which is why we think it's important to diversify how we do business and not just focus on, direct relationships with customers, but have an indirect relationship with them through a fintech partner.
Excellent. So what's really next for NBKC? You already have this Fintech DNA. So springboarding into the future, what are you going to look towards doing?
Well, I'm super excited about where we're positioned as NBKC. Whenever you change a strategy or you add to a strategy, it takes a lot of time, money, and resources in order to sort of get there. And so really the last few years, we were building that foundation and kind of getting our brand out there. And now people know who we are. And it still is amazing to me that, here we are, just $1 billion community bank in Kansas City, and we meet from in the valley that know us, or, the East Coast or overseas now. And so I think that's super exciting. So it really, I think, is going to allow us to really pick the right partners to partner with. We do not want to be a bank that just partners with everybody. So, as I look into the future, especially in the short term, I don't see us having hundreds of customers, hundreds of fintech relationships. I see us having, 30 to 40 really solid relationships. And so having our name out there, I think, is going to allow us to kind of basically put a flag out and say, hey, we're open for business. If you have an idea, please come to us and talk to us. So I think that's going to allow us to get a leg up on our competition, because we're going to be on the cutting edge of seeing new product ideas that, a lot of people aren't going to see until it comes to market. And we're going to be on the forefront of, working with those companies, piloting those programs, and then also maybe taking an equity piece, maybe sharing in the revenue, helping them with distribution. And so I think that is really where I see us going over the next 3 to 5 years.
That's such an exciting place to be. And I guess really in that instance, if I could ask a follow-up question on that and the changing nature of banks in the States, as more of this collaboration grows and having several different partners providing different technology, is there a fear that a bank's brand awareness might decrease as there are other partners and people maybe aggregate their banking information into one application? Do you think that the banks need to change their role and how they interact with customers? Or do you think there's still always going to be that banking brand in the heart of all of this openness and fintech revolution?
I do think that it's important to build a brand. I think, and I kind of take our CMO's lead. This is her expertise, not mine, but we are trying to build really a two-pronged brand strategy. So one is our relationship with fintechs, but we also want to have a brand that is known by consumers and small businesses. So I think that it's going to be important. I think that the way that a bank is going to interact with their customer base in the future is going to be dramatically different. I mean, we're seeing that every day where branches are closing. The physical branch location, that is really a dying breed. There's so many people, the millennials, if you will, and younger, that have never been in a bank branch and probably never will in their entire life. And so that tells you that there's these banks have got to be innovative and figure out how to interact with customers in a different way, other than just through a physical presence at a branch.
Well, that's absolutely brilliant. And thank you so much for your insight, Eric. I think that's all we've got time for. Thank you very much for joining us. And to all our viewers, thank you for watching. And you can catch the rest of the series at www.fintechf.com and, of course, YouTube. So thanks for watching, and I'll see you next week.